All right, good evening, and today is January 11, 2024, and it's a Thursday, and it's a CBI release, right? And the CBI is harder or is higher than expected. So the actual right here the point consensus is 0.2, but it come out at 0.3, so it's high right there. Anyway, we are in the second week of trading this year, right? 1 year we have 52 weeks, so it's second week, and right here is we are in this week 2, and then we have week 3 and week 4. If you look at like a Microsoft, right, the earning gonna be in 23rd, right? 23rd, which is the 4 week. So we're looking for a lot of on January, right, is the first quarter. Actually, it's a report of the third quarter or the fourth quarter of this 23 year, from October, November, December. So that report in January right there. So it's the last quarter of the prior years right there. So we're really looking for on the week 4 and see how market react to all that earning for a big company, big tech right there. And another interesting is that today it's CBI, and we're gonna look at the chart, see how it moves, and what is the setup that market present to us. But January is one of the month that investor or the spectacular like us, we watch very close because it set the tone for the whole year, right? If we look at the monthly chart, we can see, right, like last year, October, November, and then this is the January, right? So range, even though December is kind of December is a down close, but January is set a tone, so it go up, and then is it rocket from there, from January is. I remember someone said that if January is close, above the low of December, then we have a good year right there. So far, so let's see this January, how it can play out. One of the scenario we look for is that if it retests or revisits the all-time high in 2022. Let me see, is 79.98, right? 79.98. 79.98. $79.98. So this is the monthly all-time high, right? Let's color a little bit different right there. So the best scenario, if we want to short them, make sure it tests this one and it fell, then that's the best time for it to go in a short, on the monthly chart right there. Okay, so that's the monthly. Let's look at the weekly to see anything, we're going to see the weekly. So here's the weekly. Let us remove this. So here's the weekly, how it's working out. Right, if we put the RSI in, right, which is the momentum, relative momentum, it gives some hint, but it should not be a deciding factor, right? So you see, even though this gun is above this, but it's kind of diversion right there in terms of. So we would love to make. We would love to see. You see the diversion right there. So it's make a high, but the R's make a high low. So we love to see it touch this one, but it get a rejection. Then it's a beautiful short, and our target gonna be here. I think it's gonna retest this sell liquidity, or you say the low right there. So another term for that. So sell liquidity or the prior low. That's not the same idea, but different term right there. So yeah, that's we're looking for that. Keep that in perspective. Okay, let's go to the today. Okay, for this year we're gonna do differently. We're not gonna trade on 1 minute time frame, our favorites for 2023, but for 2024 we change. We go to the 5 minutes time frame. The reason we change because we do some research. It's recommended that we go to 5 minute time frame because the 1 minute is a little bit too fast. Yeah, the 1 minute is a little bit too fast, and it's easy for it to make an error and easy for it to make a impulsive trade, right? Impulsive, right? Impulsive. Right, let's make sure. I think I say it right. Make the trade that yeah.
Impulsive.
Yeah, impulsive. Yeah, impulsive.
Impulsive.
Yeah, that's what we try. Impulsive trade. So let's try out for this year. We try the 5 minute time frame. So for this year, we modify our rule, right? Remember the first when we start out in 2020, we have a very simple rule: just one trade for 1 week, and we'll do the trade on Thursday or Friday. But this year we're gonna modify. We're gonna trade every day, and we allow to trade 2 trade idea per day. And each of the trade we're gonna have 2 re-entry. Okay, and the pattern or the setup we mainly trade is gonna be breakout or fail breakout. We do breakout, fail breakout, and also we incorporate the DR model right here, which is the high of the day and low of the day for the first hour. And also we incorporate the fair value gap, help us to optimize our entry. So that's an idea right there. Today we have a very beautiful setup right here. So basically we see that in the pre-markets it take out, let's mark this one, right? The high of the prior day is 477.45 right there. 45. Let's make it 45. And you see that at the 9:30 open, it won't turn above that. So it gives us a very good setup for, for breakout, right? For breakout this level. And we saw that, and we take a screenshot. We almost checked that straight, but for some reason we did not. But here's is the screenshot that we checked right here. So right there, we take screenshots. It's for breakout source of sales up at this level, right? Friday. Yes, right there, and entry 940. The target is we're very conservative at this target, which is the first 5 minutes after the CPI data release. So we saw this right here. So that means it trapped the sell side right here. It's gonna take this. A very clear setup right there, and the risk reward is 1, 2, 3, or more than 1, 2, 3 right there. 1, 3, 1, 2 right there. So we reach about 68 cents and we get $2.23 something. We took screenshot. We kind of hesitant to go this trade, so that's an idea right there. And yeah, it's now a very solid trade. It hit the target. But if we let it run, it go to the. If we look at the charts, right? So it actually go all the way to. It didn't reach the 0.5 standard deviation from the DR model, but it did go below. It did hit the prior day DR low right there. So we either put right here the targets, or this day is the targets right there. So this is a very quick trade right there. You see 1, 2, 3, 4, 5 candle right there. Double very quick. Okay, so when we kind of miss that trade, then we come back, and at this moment we saw right here, we thought it's gonna be a what? The DR model, right? So it's based on the DR model, right? So this is a bearish, right? It's close below that. So this is gonna be a good setup to short when it go around the mid-range level. So we did entry right here. Let's look at the screenshot we have. So right here, basically it's a for breakout, right? We thought it's gonna be breakout level. Yeah. Break out this level. Or at that level also. So we put the sell stop when it, so we treat the mid-range as a level. If we're gonna fail break out that level, that's how that's the mindset that we have, and we target as 0.5 standard deviation. So it's going to be a huge risk reward ratio, and we enter at that level. It turned out that so we enter around here 15, right? But now we the market don't give to us what we want. So we put a stop loss around this, right? It would be 476.38. So that's our stop loss. Yeah, so I think we go around this level. Is that 20? Yeah, we go in right here. But it hit that level. I think we out of this at 50, and we lost 1 hour, 60 cents right there. So that's a good trade. I mean, even though it doesn't work our way, but it's a good trade to take. If next time we have it, then we will take the same trade. But one thing we learned that, you know, the DR model not working well when we have the high impact scenario, which is the CPI. So next time, if we know that it's the high impact scenario, we should not the DR no longer reliable. So that we should take into consideration. When we take the trade, we completely forgot about the nuance of the DR. So that's our mistake right there. That's unfold errors from our end right there. But we saw it's very good risk reward, so we take it. So anyway, we will learn from, you know, our mistakes. It's okay to make an error, so don't dwell too much on that. And next time we will have fear right there. But at the same time, we have to do a dilution analysis, so we can learn from our mistakes. Yeah, so we lose 1 hour on that trade right there. Even though we saw the divergence, you see right there, at that moment we saw, wow, we thought that we get that trade. But let's see. Let's see when tomorrow how it's closed out this week, right? Yeah, let's look at the 13 right here. Yeah, this is the 1 hour time frame. Okay, let's look at the 4 hour. Let's look at the 1 hour time frame. See. So we try to short them when it's 14, 15, which is this one. We short them when it's this level right there. Very interesting. Okay, so here's the, the Monday, Tuesday, Wednesday, and Thursday. So this level is a 4 breakout right there. Even though it's close up, it rally in the BM, but it fell touch level. So tomorrow, if we want to check look at this level again to see how it's gonna react to levels, give us some idea whether tomorrow we will short them or we're gonna long right. So we see the uptrend right here, and we see it's break the structure right here, right? We want a confirmation break right here. This is a very breaking structure right here. We want a confirmation, and then we want to right here. You know, if we look at the market structure, or we can look at this level similar right here, or this level right here, see if there are 4 breakout, right? 4 breakout as a level. I think it's very key level. We need to watch this candle. Give us some idea right here. Yes, that's the very obvious level. You see that high 75.34. And what is this one? 73.40. 40, right? And this is 34. So that is our assignment, right? That's our target. We want to watch it level 745. I mean 475.34, and this level. We want to watch this tomorrow. We engage to see how the market move around this level. Okay, that is our assignment for tomorrow. We want to watch this, see how market behave around this level, right? In terms of structure, we see it's break the structure, but there's no follow-up. We want a confirmation, then we know gonna be our trend. Okay, so we can short right here also, or we can short right here. Gonna break down right here. Yeah, so this key level, we're gonna watch 3 of them, right? This one, to see if we're gonna go here and reject, fail, and it can fail, break out, go short. So we're gonna note this, 3 key level right there. Yeah, that's the 1 hour. 4 hour time frame, we see anything? Right here. So basically, yeah, look at the huge right here. Wow, let's give you some idea right here. You remember right here, big down move, and then it take the sell side, and then it bow back. So this candle also give us some idea. You see that this level right there, very important also. And right here, it create a 4 breakout. You see, a lot of people thought I'm gonna short them, but if someone smart enough put a buy stop, they make a good money right there. So basically, it just take the sell side liquidity of this. So we're gonna believe that it's gonna make, if tomorrow it failed to break this, or I mean for the week, for the remaining week of January, it failed to break this level, failed to retest, then we believe that it's gonna come down and take this sell liquidity right there. You see the pattern right there? So this is the signal right there, right? And then it take the buy side, and then come take the sell side, and now it come against the buy side again. You see swing buy side again, and we believe that it's gonna take the sell side if this error is if it failed to help right there. So it's very interesting to watch right here. This level, very interesting. I think it's gonna come down here. You see the gap, you're not gonna go long if you see this gap, right? So it may short and go down, freezes this gap. So we see the gap right there, and this sell side liquidity right there. So let's mark this right here, 464, 464, 61. Now, one thing we're missing in our arsenal that we need to determine the market type, right? In order to do that, we need to apply a little bit statistics. So we're still working on that, and we can incorporate into our trading right there. Yeah, if we based on 200-day MA, moving average, then right now the SPY is in a bullish condition. So we know that the buy in uptrend. If it uptrend, then we see if it break the market structure on uptrend, then we'll short them. Otherwise, we continue to play the uptrend move. Yep. So basically, we saw it, take the sell side of this, and it take this buy side. I think that's it for now. It's just the first video we do for the year 2024. So keep it short and sweet, and talk to you later. Have a wonderful evening. Bye for now.